what the hell is a Trump trade and should you have one in your pension? Look, these are the main criteria that people miss. What you've got to make sure is, well, what's your target? It's got to be substantial. It can't be 10% in 12 months because the volatility would be too great. You need a compensation package which is worth it. You need a duration. And you could say go longer than that, but why? Ideally, of course, shorter than that would be even better. So if that happens first or that, but that in itself would only be looking at one side of the coin. We need to know, is it reasonable to put a stop loss, limit our risk at half our reward? So we've got multiple up to downside. Well, that'll only be true if volatility would not knock out the stop loss. If it would, then there's no point having a stop loss there, obviously. Okay. Uh, and the best way to make it bespoke to your own personality, because that's the thing that matters the most, not just trying to be Alpesh or trying to be Donald. You can't be me any more than I can be the orange man over there. Due diligence is drawdown depth and duration. If you don't like how much the instrument can fall and how long it takes to recover, then you should not be in it. Putting less money in it is like putting a brake and an accelerator pedal pressed to the bottom at the same time. And then make sure if it does hit your stop loss, you don't lose more than that much of your total capital. Why do people mess it up? They mess it up because they don't get enough reward, they don't hold long enough for it, they put the stop loss too far away, so if it doesn't work out, they lose a load of money, or they put it so close that it gets knocked out by noise, so they miss the opportunity, which otherwise was a good one. Emotionally, they don't look at the drawdowns historically, so they panic when it drops less than the 20% in any event, or if it's going nowhere for a few months, they get bored and or panic as well and start chasing the market. And finally, they mess it up because they put too much capital into it, which then also leads them to panic. That might be you. If it is, you better learn from a hedge fund manager. Have a look at my links in the bio, alpeshpatel.com/links. There's so much free material there to help people improve their pensions and the like. Thank you.